Hello guys, John here, and welcome to the second video of my markets review series where we analyze Bitcoin, the S&P 500, and gold. Now, before we get started, I do want to remind you guys that this video is brought to you by and sponsored by Prime XBT, where they offer leverage trading on all different types of instruments from the S&P 500, gold, and even currencies in Bitcoin. So please go check them out, guys, and let's get started. Okay guys, let's get stuck into it and let's start with Bitcoin. So in this chart, the only thing that I've left on the chart is the resistance line that I had from the video 2 or 3 weeks ago. I think we were around over here, right? Around over here. And I said that 16,200 is the level to break. And if we did, we would break out in great fashion. And you can see we broke above it, came right below it, closed right here, had another attempt, did break through it, and did so in great fashion, right? And then of course we had this, this day where it actually retested the, resistance turned support now, right? It turned to support. It actually retested it perfectly, giving either further credit to how strong this now turned support line is. So guys, this $16,200 level is very, very, very important. Okay, so let's look. Let's see what happens if it does break below that level and close below that level. Get a horizontal array, and I'm thinking right there. So you can see how, after we lost confidence after the bull market in 17, and excuse me, I do have allergies here guys, but here was the retest, right? And then of course lost a lot of confidence after that retest. So that was very, very important too. So that's our next level, to where if we do break below this 16.2 line, the next support would be here at just below 14,000 that we would not want to break. So let's look here. Okay, so let's go ahead and turn on some of the indicators and we'll see what these moves were and how we got here on the weekly. So let's turn on the high time frame. Let's turn on some bottoming indicators and some strength indicators. And we can see here, guys, starting all the way by 17. Let's start with just the strength and weakness signals. That's these arrows that are not accompanied by the yellow shaded squeezes. They are strength and weakness signals. And as you can see here, each one of these would have been immensely profitable. We had none of them at the top here, just leading up to the top. And then at the bottom here, going down on the weekly, we had none. That's a squeeze breakout. Over here, we had one strength signal, broke out to the upside, and that's it. So basically all the signals that have played out, the strength and weakness, have been very, very good indicators. Now let's go to the squeeze indicators, right? And that's where you see these shaded areas. This is where volatility builds up and then gives you an arrow to signal the breakout and the trend that is about to start. And you can see it worked here and it worked here. And the reason why I'm going over this, guys, is because I'm trying to just help you understand how important these high time frames are as well. I mean, you could basically just play the weekly and you would have made, a huge return over the last couple of years, and also have stopped yourself from losing a lot of money. So let's go and switch to the daily. Let's take all these indicators off right now that we've just looked at them. And let's get back to our levels and what we're looking at now. So let's go to the daily. We can keep these little indicators on here. So as you can see here, right, we've had this move up here. We had our double bottom here, signaled by this little indicator here. And we've now had our pullback, right, and we're testing this breakout as I showed you on the weekly, right? This is just playing out on the daily. So let's start with some fibs, right? Let's see here. I'll tell you what, let's go back to the weekly real quick and let's fib this from the weekly. All right, so let's go from the absolute low point to the high point. Okay, you can see here this 236 level is right around this resistance line that I drew, right? And again, just to solidify the thinking here, the thought process that I have is I don't rely strictly on lines that are to the dollar. Rather so, I believe in areas, support resistance areas and zones. So this is close enough to where I would definitely qualify this as a confluence to this level here, this 16.2 level. Same thing here, right? With this fib here that gets close to this $14,000 level, right? So not to jump around between daily and weekly, but definitely on the weekly, this plays out, this fib level from the low. So let's take these fib levels away and let's fib it from the recent low, right? Let's fib this move basically. Oh, it could be that candle, it's not going to matter. And if we go to the highs here, again, now it's the 382 level that is coinciding with this support resistance level, guys. This 16.2 level is so important. And let's go ahead now and let's go ahead and measure the move. I think it was a 17% move to the downside, right? A correction. Let's just check that. It's right there. Yeah, right on the money. 17% right there. Okay, so 17. Oh gosh, guys, look here. 17% brings you right to this support line, giving it even more confluence, right? And in 2017, those of us that rode that bull market, we had to get used to 30% corrections, which happened all the time. So just for argument's sake, being the devil's advocate here, let's go ahead and play out what a 30% correction would be like if this had to continue and see where we might end up. 30% would be, guys, come on, right there, right on the 14K level, right, just below it right there. So again, guys, these are our levels in the sand. They're 16.2 and they're 14,000. They're very, very clear to see. It lines up with the fib levels. It lines up with the correction that we've had right now down to the 16.2. And if we did have to get a 30% correction, which I'm not anticipating just yet, I don't try and forecast. I let the market tell me what she wants to do. But I do TA ahead of time to see what that might look like, so I'm never caught off guard, and I always have a game plan. I always have this taken into account in my trade plan. Okay, so let's go ahead and take these off now. Okay, we'll take that off. We'll take that off, and we'll take the fibs off. Now let's just see what type of moves we could have played or how we got here, right? Let's go ahead and put on the high time frame indicator. We'll put on some bottoms. Oh, it was on, and then obviously we'll leave that on. So guys, again, this is what I've played on Twitter, and I've made a killing. As you can see, this is my first post about Twitter where I say we're having these squeezed breakouts to the upside, and I'm getting long, and of course you can see that was a great move. And then the next squeeze we had, of course, that was a great move. So that's how I've played them. Of course, along the way, you've had these signs of strength signals that have kept you in the move. Yeah, pretty much. Oh, and here's your double bottom, right? Bam, bam, off to the races. So again, guys, that does it for the BTC review here. Again, just to reiterate, watch the 16.2 level. Oh, and also this was interesting to me as well, before I forget, because I actually did get a long position here. So I was expecting, since we've been in this uptrend, right, that if we did pull back, I was expecting a pullback to the 20 period moving average at some point. And you can see that we blew right past it, right, but then closed like almost literally right on it, right? And it's a day, we still have 4 hours to go, but hopefully this closes above this 20 period moving average. I did go long there, and I'm in a little bit of an underwater position, but I have two separate trade accounts too. I'm trying not to go on here, but you do want to have an account that you long BTC as an investment, and then if you want to trade it, you should have a separate account with a smaller bag to trade that in my opinion. But that wraps it up for Bitcoin here, guys. Okay, so now that we've gone over Bitcoin and we know that nothing fundamentally has changed there, we've had a healthy little correction, still bullish. Let's move on to gold here. For you gold bugs, this is the weekly chart. For those of you that have been following me on Twitter, you might remember, or some of you even got into the March longs with me, which was right about here. I believe that we sold that right here, where we were having a bit of weakness right at the resistance level. But let's go ahead and and these lines here, these three lines, I've left this on here. I am also trying to catch a long. I'm trying to wait for a setup because I don't just buy levels. I let market tell me when she wants to give me a high probability of success. So let's zoom in here and right just before we do that, you can see why I've drawn these levels. Each one has been a point where it's been rejected, and if it did break out, it broke out in an amazing fashion, and if it eventually broke through that level, it lost a lot of confidence, and back here we are. And each one of those are levels in which do exactly that. So zooming here on the weekly, you can see that, we've tested the highs here, just like Bitcoin. People were a little bit too bullish. There were too many levered positions, and this thing came crashing down. And it first hit this first support resistance level, bounced off of it, did not have what it takes to touch the upper level, double tapped it, tried again, right? And it was a good try. But simply, it's just not time. And we broke right through the next level. And of course, this is my next target for you guys. Target for myself, too, that I'm watching. I would like to see it bounce off of this level here is what I would like to actually see. So, yeah, I guess we could fib it. Okay, let's do a short fib, the most recent lows, right? Low point to high point. Let's do that right there. Okay, because I don't believe this is a huge move in gold, but I still think gold is bullish long term. Yeah. Okay, so it pulled back to 0.5 level, or at least that's where I think that it's going, right? So yeah, that's a bit of confluence, but again, I'm looking for the setup here. I want to watch the reaction that it has here at this level when it reaches this level here. And let's get some more help from the indicators. Let's see if we can catch anything. Okay, well, you can see right here, so whenever you have this here where it alternates, obviously the orange bar is the strongest bar and the biggest bar out of all the wick thrusts. Now, I watch for these orange bars, but I also watch the next day to make sure we don't have an alternating signal, because this shows a change in power, and they are very, very strong doing this, okay? And you can see here that sure enough, when we had that change in power right here, it was not a big price action move, right? It did kind of, gap down here. It was big, but as far as right here, this lets you know that the move's not done to the downside. It's still coming. Sure enough, right here as well, right? You had a big move to the downside with a price action, and even on this little day here, actually, sorry, it was the next day, this decent candle here, it lets you know that there was so much institutional buying power that this is a change in power, okay? And sure enough, that's what you got. So hopefully this isn't too strong being the same thing, right? Now, you really did have a big order magnitude down, flip to the up. That's really powerful. This one, you do have kind of a decent one to the upside flipping. So, yeah, guys, and just watch out for that. Let's go ahead and turn on some of the other indicators. Let's go with the high time frame. Let's start with some support and resistance to see if it shows us anything else. Okay, that takes some workload off of our hands. Now let's turn on the squeeze indicators. So if you're playing this simply for the squeezes, well, you would have been gone long here. You would have made a short here, made some money, gone long here, probably taken half profit at the top of the Bollinger Band, the rest at the bottom of the Bollinger Band. Wow, it's raining really hard here, guys, so if you can hear that. Storming here. So anyways, so then we went through another squeeze. I'm trying to talk over the rain if you can hear this. Yeah, I mean, self-explanatory, man. These squeezes are so powerful. It's not your regular way of trading. It's trading volatility. What I don't like is I don't like this price action to the downside plus a bearish divergence that happened at the same time right? Like you get this right here, and then you look at the bearish divergence just before it. This should have been setting off alerts to you to short, right? If not beforehand, this break into the Bollinger Bands, testing the 20-period moving average, bouncing off of it, and then, really getting rejected right here and here. Yeah, these should have been your days here, guys, where you don't want to be long this stuff. If it balances, great, but it did not bounce right here. And again, this is where I'm looking for a more decent setup. And again, this is on the weekly, right? So let's switch to the daily. Let's take all this stuff off over here. And once again, apologies for the allergies. I wish I could take them away. I took double Claritin for you guys, but did not work. So let's switch to the dailies. And sure enough, you can see we're in no man's land. This is not, right near this support level, which you can see we had some indecision before breaking it today. But it's also not near the next level. So there's no trade here, guys. There's no setup. Market's not telling you anything. Again, if we fib it, right? Low point here to high point. High points right there. Yeah, that 0.076 level is on my mind. That's what I see. So let's even get rid of that. No clutter. Daily, we can go ahead and turn on some indicators now again. Support and resistance. Okay, that kind of clouds the chart. Let's keep it simple. And here you go. Okay. So here's one of the first times that on live that you can see that I actually had some chop here in the squeeze. I think gold has been has had a lot of players in this move, and these were the guys trying to decide, are we going up, are we going down, pushed to the downside, rejected right off the support level, and of course it just did not have confidence to regain above here, but both these signals did work. They just didn't break through the support resistance, and this is exactly why you always keep stops, right? So for instance, this stop loss should have been set to the middle Bollinger Band, and this would have been a little loss, right? When you have longs that show you like this. And this is what trading is about, right? And this is why I'm showing you this on this video, is that it's not about always winning. It's about how much do you win versus how much you lose, that ratio. And then, of course, after that, it's, how many of those do you win, right? But more along the lines of your ratio. If you're taking, longs here and you're making all this money here, but you're taking a little bit of chop here, I mean, what does that really take out of this long move? Not much, right? So yeah, gold is no move unless you're shorting it. Listen, I'm not going to lose my spunk here. Gold's making me depressed. You short it if you want to short it. If not, look for long here. That's the end of the gold story. For me. So let's move on. That's the gold story, guys. Okay, so we took care of the BTC hodlers and the gold bugs. Now let's get to the traditional finance people on the S&P 500. This is the SPX, and this is a weekly chart. Again, I've left my levels on here for my support resistance levels. You can see starting by the bottom when it's pretty clear, rejected. When it does finally break out from a double bottom, breaks out in great fashion. It has this, this was the recession, right? Or it's called a recession, a V-shaped recession, right? Worked out very well. Got here to this level, hit resistance right there, hit support right there, hit it again, and that was enough. That little double tap to send it on its way. It kind of likes this SPX, likes these double taps. It really does. It likes these double taps. And then currently, right, it was rejected right there the first time, lost confidence, didn't have enough to take it out. Basically tested this resistance, and that shot it up here with that double bottom. And we've finally broken out, right? And this resistance here, we kind of shot above it, broke below it, closed right on it, right? Then opened above it, went higher, went lower. So it's just fighting this, but right now it has closed. Because it's closing right now in a minute. It has closed today on this weekly above the resistance level. So that is a great sign, because if you look back, obviously there's no overhead resistance, and this is one of the most bullish things that you can have, right? Because for something to make a new high and keep making a high and make you money, it has to keep breaking highs, right? And well, there's nothing else left to break, so there's no support levels, there's nothing else to go by. Some people use fibs to do this. I don't think that's a great way to do it. Basically, it's bullish, right? If you can find some other things to go along with it, right? So if we zoom in here and we just get a little bit of help from the indicators, what is the first thing that we notice after going over what we went through today? You notice a change in powers from the wick thrust right here, okay? And it signaled on this day on this big bar, and it was just what it needed to actually break through this resistance line that it could not do over here. Okay, so that's what I see, right? That's what I see. I do see a bearish divergence here, and let's see when that played out so we can see what happened. So right there, which was 2 days prior. So let's see what happened there. Okay, so that's this day, so that makes sense because it went to the top, bearish divergence, went all the way down, and opened here, right? So that's taking care of that divergence, that's out the way. But we still have this move left, which is what I can see. And that's on the weekly, right? That's on the weekly. And even if we go to squeezes, I don't think there's anything, right? Here's where you made your money from the squeeze, the volatility squeeze, right? Was a good move, but let's take that off. Let's switch to dailies. And let's enlarge this just a little bit. So here you go. Here's your dailies and your daily levels, right? Playing out from the weeklies. Sure enough, right, as I said, we just broke above this, and it looks like we're staying above this for now, right? And yeah, I think this is good. I like this price action, especially with the little green bar on the daily here on the wick thrust, and the wick RSI is finally, the orange line is finally over the other two, which is what we look for. So this is good. No overhead resistance. The indicators look good. Let's see if we've had any squeezes. Let's put some bottoms on here. You can see here actually was a double bottom. Bam, what did I say? This SPX loves these double bottoms. You can see right there, there was also a double bottom there. And this one kind of wasn't a double bottom. I wouldn't agree with that one. Let's see, boom, boom. Yeah, double bottom up. And what I see is that an even bigger double bottom had played out, right? Which is right here. Okay. Yeah, that looks good. So we'll put on some high time frame squeezes. You can see that we haven't had a lot of price action, right? We had a squeeze there. It didn't indicate a down move or up move. You wait until the arrows. The last squeeze that it was indicating was right here, right? So again, this was the power move that you should have called the easy trend, and it's been chopped since, right? With a couple of bottom signals, and then just now, as I said, we've hit this level where there's no overhead resistance. So I am bullish on SPX to recap. I am still bullish on Bitcoin. I think that we have that 16.2 and that $14,000 level, and I wouldn't touch gold. There's no setup in gold. But SPX looks good, man. Even if you want to, not investment advice, but I might even look to taking a long here and setting a stop loss, maybe below the last low. So like, let's see, maybe below these two lows, like right there, put your stop loss. And that would be a great risk versus reward, especially since there's no overhead resistance. Don't worry about what the fundamentals say. If it's one thing that I've learned over the years is that fundamentals do play a part, because every now and then you get the news before the big players. But for the most part, by the time you get news and you want to play that news, it's already circulated through the strong hands. It's already circulated through the hedge funds, the institutions. So I watch, and that ends up playing out in price action anyways, right? And again, don't let me ramble here, but I'm a technical analysis believer. I do have friends in the hedge fund industry, and they're macro hedge funds. So what they'll do, right, is they'll look at the world and they'll look at gold and things like this, and look for a scenario to play out before anyone else sees it, and then they'll look for that scenario to be confirmed within the price action. So those are the only guys, spending millions of dollars on macro and really have economists by their side that can really take the fundamentals and decipher them enough to make it worth it, right? And they get a little bit of a head start on us, right? Like they might have called this double bottom beforehand, right, and been looking for it to actually play out. Whereas I'm, watching the chart and watching it play out. They might have been over here, knowing that gold's going to fail, right? But anyways, let me wrap this up, guys. That's it for my markets review. I hope you guys enjoyed, and I'll catch you guys next time. Oh, and don't forget, this has been the first markets review sponsored by Prime XBT, and they have absolutely everything that I went over today. So go check them out, guys.